voice is very soft, so I need to make sure I get this very close. Can you hear me in the back? Okay. So many of you probably attended my talk here in April when the financial markets were in. Oh, can you hear me now?
Yeah, you gotta really be close to that mic.
Okay. Many of you probably were here back in April when I gave a talk on the economy. The stock market had just taken a big dive, and there was a lot of people here. They were competing with the Texas Book Fair and the opera and other things, but fortunately there's a video. If you have people who are interested and want to, they're going to post the video of it. Back in April, I mostly talked about the inflationary effects of the tariffs and immigration. And after that talk, Eli Cox came up to me and asked about the effects of AI on the economy, which I had not discussed, and so I'm going to correct that today. I also comment from Jim saying that he thought that the more intelligent people in the administration were going to moderate what happened on the tariffs, and that indeed happened. We nonetheless had some inflation, but not as much as what many people feared from the tariffs, in part because they moderated what they'd originally proposed. Today's talk, I'm going to present a background in three broad areas. Semester-long courses are being taught on each of these topics, but I'll try to be brief. First, I'll take an overview of the current economy and the near-term outlook. Second, I'm going to take up the economic aspects of the AI boom. And third, I will discuss the budget situation and outlook, the current shutdown, and the tariff case. So please raise your hand if you have a technical question along the way, and I hope to have ample time at the end for substantive discussion and questions. So this is a chart of what's happened and expected to happen to GDP. The Congressional Budget Office made a forecast back in January, and then it revised it in September. In between January and September, they lowered their forecast for GDP growth this year from 1.9% to 1.4%, but they raised the forecast for next year up about the same amount as they lowered it for this year. We're basically running an economy about 2% or maybe even less, real growth. After you control for inflation, real GDP is growing about 2%, and the recent projections of the Federal Reserve are consistent with that. They are saying 1.6% this year, 1.9% next year. That current growth rate compares to the 1950s and 60s when we were growing about 3% or more a year on average. We had ups and downs, some years 5%, some years recessions, but averaging, cutting through the 50s and 60s, the growth was about 3%. And a big reason that slowed down is because the labor force has slowed down. It was growing 1.5% a year, and now it's growing less than 0.5% a year. Optimists think that productivity is, the biggest drivers of GDP are basically how many people are entering the labor force and how productive they are. And optimists predict that productivity is going to accelerate with AI and other technology opportunities. The pessimists doubt that we're going to see those kind of productivity gains, and they worry about what's happening to immigration, particularly potential effects, not just in the labor force, the 0.5% or so a year that we've been getting, but also whether if we restrict immigration of people with STEM skills, whether that will reduce our productivity in the future. The Conference Board does this measure what they call leading indicators. They look at various measures in the economy that tend to anticipate when you have a recession. And they've had a reasonably good track record of anticipating recessions. I think the 2020 recession of COVID, those indicators hadn't predicted what was going to happen with the COVID recession. But they're now, for the last couple of years, they've been flashing that we could have a recession, and meanwhile, the GDP has been plowing ahead. For what it's worth, the economists at both Goldman Sachs and JP Morgan are saying there's a 30 to 40% chance of a recession sometime in the next 12 to 18 months. This is a chart on population growth. It's a major driver of what's the GDP and the general output is going to be. The black line represents the actual growth of population, and divided into the bars show the contribution. But the dark bars represent population change from the domestic populations, births and deaths. We've had more births than deaths. Population's been rising in the past. They're predicting by 2033 that we'll actually have more deaths than births. Therefore, the population will be declining based on domestic population. Immigration, though, adds to the population. Then in 2022, 23, 24, we were getting almost 1% additional population just from immigration. CBO thinks that what's happened to immigration this year is immigration is only adding 0.1% to population growth in the U.S. Their thing is going to bounce back somewhat and stay at about 0.5%, but that obviously is more than what the administration is saying that they want to have in immigration. It's a major factor in what's going to happen in the future and difficulty in projecting what's going to happen. Many things I'm going to talk about are showing why it's difficult to project things very far out in the future. The CBO also changed its inflation forecasts for this year and next year when between January's projection and September's projection, they raised their projection of inflation from 2.2% to 3.1%. They expect inflation to fall back to 2.4% next year and then basically hit the Fed's target of 2% 2 and 3 years out. 3% inflation is less than we had several years ago, or even a year ago, but still noticeable, higher than what we had earlier this year. And it's reflected in the dissatisfaction, I think, that the public is showing about economic policy. Tariff revenue, for what it's worth, went from before the April increases. Tariffs were about 0.3% of GDP. They more recently been running about 1% of GDP. So that's a 0.7 increase, and that's roughly in line with the increase in expected inflation this year. The general consensus is that an inflation effect will dissipate over time, but it boosted inflation this year. The President began his tariff initiative in April with the argument that they would increase jobs, particularly in manufacturing. That's not been the case so far. Jobs were increasing from early January 2024 up until April of this year at about 150,000 jobs a month. Since April, it's been about 25,000 jobs a month. With the shutdown, we should have gotten jobs. Without the shutdown, we would have gotten jobs report yesterday. We would have gotten one the month before. So we're missing reports for September and October. But we do have other private sector estimates of what's going on in the labor market, and they also show that the job market remains soft. Not recessionary, but soft. Softer than it was early this year. Turning to manufacturing jobs, they've actually declined since April. That's not a big surprise for two reasons. First, productivity has been reducing jobs on an inexorable pace. Manufacturing output, if you look at the peak back in the late 1970s in manufacturing employment has fallen from 19.6 million to 12.7 million lately. It's a huge decline in manufacturing employment, even as the best measures of manufacturing output have more than doubled in that period of time. In addition, manufacturing companies have been complaining that since April that the tariffs are disrupting their planning and commitments to hire. So next I turn to AI. And I don't think you can understand the current economy today without really understanding something about the role of AI. And as I said, the underlying GDP seems to be growing about 2% a year. Capital expenditures just by the tech firms added about 0.9% to GDP last year, but looking at the second quarter, they were adding 1.3 percentage points. So just their investment was making an added investment, was adding a huge contribution to what GDP growth. There are different ways to do this. Some people say 90% of the growth has been in IT-related investments, some say 0.5%, but it's a huge contribution to what's happened. For its share of the total economy is tiny compared to its contribution to actual new growth. And let's just look at the chart here of you can see it was rising and it fell, and now it's been sharply going up. That sharp increase from OpenAI announced ChatGPT to sort of open the floodgates for competition and investment in AI. That happened where that trough is, and so we're having this huge increase in spending by the big tech companies. These are all profitable big tech companies. There's some non-profitable, yet to be profitable companies. They're also investing in AI, not shown in this chart. So you've got OpenAI, Anthropic, Musk's xAI company is also, they're planning huge investments and not yet profitable. Let's talk about OpenAI particularly, because they're sort of at the centerpiece of what's going on. OpenAI expects its revenue to be about $13 billion this year. They're expecting, their projections are to have $200 billion of revenue in 5 years, 2030. So that's a compound growth rate of 73% in revenues that OpenAI is saying it's going to get. Their spending plans are even more ambitious than their revenue plans. They're expecting to be in cash flow negative. They're spending more money than their revenues until 2030. Just taking 2028 as an example, 2028 they expect to be in cash flow negative, almost $50 billion. And they expect, that earlier chart showed they had expecting revenues 100, so they're expecting expenditures of almost $150 billion just to that one company. That's comparable to any of the spending by those big companies that we're projecting out that are profitable. And OpenAI has used a number of, Stuart sent me this chart, but OpenAI has had very creative financing to make those kinds of investments and support that, the cash flow negative position that they're in. They've got they've got deals with their computer processing suppliers like Microsoft and Oracle, with their chip suppliers, NVIDIA and AMD, and with their financial supporters, SoftBank and United Arab Emirates. So the big spending plans for companies without profits, like Anthropic and OpenAI, it seems to me somewhat reminiscent of the dot-com bubble of the 1990s. There's also a question of whether currently profitable companies, you had Tim Berners-Lee, who was the inventor of the World Wide Web, was at a conference recently. He thought that the future of AI was going to undermine the profits of Google and Alphabet and Facebook or Meta, because they make most of their money on advertising and getting you to do their search and doing their, and that they may lose profits from their base operations where they're making such huge margins, so that their margins may also be reduced. This chart shows the huge divergence between the Magnificent Seven and their stock prices versus everybody else. Everybody else has had a respectable increase, but the increase of those seven has been much faster. Magnificent Seven, in case you don't know it, are Alphabet, Google, Amazon, Apple, Meta, which is
Tesla.
most of it. Sorry?
Tesla.
Microsoft, Oracle, and Tesla. Tesla's usually dropped out of some of these analyses. Tesla is related to Musk and his own AI ambitions. This chart shows how current market valuations compare to past historical peaks of the market. The two common indicators are the vertical axis is the cyclically adjusted price-earning ratio that Nobel Prize winners Shiller developed, and that is almost as high as the peak of 2000 when we had the dot-com bubble. But there's also a commonly referred to general measure of the stock market that Warren Buffett developed. It basically is what's the total value of all stocks compared to the size of the GDP. And that one, the horizontal axis in 2025 is way beyond what previous peaks have shown. And that probably explains why Buffett just announced they've got a record $382 billion in cash. So let's talk about the financial risk due to AI. So the big spending by AI companies without profits, as I said, is reminiscent of the dot-com bubble. Remains to be seen whether they can generate the projected profits. They're very optimistic about their future profits. And also, given that they don't expect profits for 5 years at OpenAI, whether financial markets will have the patience to keep financing them until then. There's also the question whether currently profitable companies investing in heavily in AI can maintain their high profit margins. They're making huge profits today because they've got a market position in search or in social media or in Microsoft software that they won't have that kind of impregnable position in AI if they're all competing to produce AI and compete with each other in AI. So there's also the question of competition with China. It's not just that the US companies are going to be competing with each other in AI. China's going to be competing. And in fact, the most profitable, the head of NVIDIA, most profitable, recent $5 billion valuation, he was at a conference and he predicted that China is going to win the AI war. Their assistance to their companies doing AI. So there's going to be considerable competition, and it remains to be seen whether there's huge profits to be made in AI if the companies are competing with each I thought today's the Bloomberg had an analysis recently that said never before has so much money been spent so rapidly on a technology that for all its potential remains somewhat unproven as a profit-making business model. I thought, Stuart and I were talking about it before, this morning's Financial Times online had two headlines, other headlines, but these were two that jumped out at me for today's time. One was that corporate America has been posting the best earnings in 4 years overall, but in the last week, the tech stocks have suffered huge losses. NVIDIA itself lost $350 billion in market valuation in the last week. And other big tech companies have also taken a hit, as people have had some of the concerns I've been raising about whether the profits related to tech are going to hold up. Okay, finally I'm going to get to the U.S. fiscal situation, which is with the headline of the announcement about today's presentation. I want to give some background on the current shutdown, and then I'm going to talk about the longer-term fiscal situation, and then I'll talk about tariffs. So it's useful to distinguish between three types of legislation when it comes to the budget. First, there's appropriations. Appropriations are set the annual spending level for most of government agencies. They're passed a year at a time. They must be renewed when they expire. So that used to be 2/3 of federal spending. It's now about 1/3 of federal spending. About 2/3 of federal spending is now what we call mandatory spending. That's like Social Security, Medicare, veterans benefits. And that legislation, when it's passed, sets up spending rules and formulas that stay in place until it's changed. Likewise, tax laws, when they're passed, they set up rules that establish rates until the law changes. Now, some of them have expiration dates, but basically they can be in place indefinitely. So mandatory spending and tax laws are long-term, and appropriations tend to be a year at a time. Appropriations bills typically expire September 30th, the end of the fiscal year. If new bills are not enacted in time, the Congress typically passes what's called a continuing resolution, a CR, where they just say, until we can agree on how to fund the Defense Department or the Labor Department or whatever, we're just going to keep it at last year's levels. So it's continuing at last year's levels. It's the standard CR. And there can be variations. I was working on the census, and we were ramping up to do the 2000 census, and we needed more money, and so they would add to the CR that Census Bureau will have more money in 1998 than they had in 1997. But by and large, rare exceptions, the CR just continues what had been spent before. The procedures for dealing with these kinds of bills is different. Basically, the budget rules permit taxes and mandatory spending to pass in the Senate. It can't be filibustered, so it can be passed with 51 votes. 50 senators and the vice president if they want to vote for it. So that mandatory spending needs 51 votes. The Senate Democrats have 47 votes, which is too few to stop the One Big Beautiful Bill Act, I'll call it OBA. Among other things, it includes that the OBA that was passed earlier this year had cuts in insurance subsidies for Obamacare. Appropriations bills, which include continuing resolutions, require 60 votes if there's somebody willing to filibuster. So that gave the Senate Democrats the power to block the appropriations for continuing resolutions. And in the last month, over a month, 44 Democrats have held up the CR in an effort to restore the subsidies that were reduced in the OBA back in spring. They want to restore those subsidies. And those subsidies are politically sensitive for people. This gives an example of the yellow bars represent what will happen with the OBA cuts in subsidies, and the blue bars reflect what would be the premiums if you go back to the Obamacare subsidies. So, for example, for a family of 4 making $66,000, the subsidies would cut annual premiums from about $4,500 a year to $1,500 a year. It's proportionally more, has a bigger effect on the net income of people making less than that, and a smaller net effect. Well, so the 10-year cost, but there are costs to these subsidies. The 10-year cost of repealing the OBA cuts to Medicare subsidies is about $350 billion. So why is there an impasse? The Senate Democrats have refused to pass the CR without a compromise on the Obamacare insurance subsidies. They not only want to be able to pass it in the Senate, but they want the President and the House to be able to promise to pass it. Senate Majority Leader Thune has said, we'll let you have a vote on the Senate, but we're not making any promises about the President or the House. Meanwhile, the House passed the continuing resolution that basically says continue what you were spending last year until 21st of November, and he's not called people back into session. He's just kept people out. Now, he also has some Epstein issues about not bringing him back. I think the primary reason he's not bringing him back, he refuses to negotiate. He says, we'll negotiate after you pass my bill. And likewise, the president's refused to negotiate. He wants Senate Republicans just to change the rules and not allow filibuster, not allow the requirement of 60 votes, just pass it with 51 votes and pass what the House has passed. So that's the impasse. And it's anybody's guess how that impasse gets resolved. There's more and more people complaining about the fact of the shutdown. Governors, Democratic governors, and other people concerned about government functioning would like to have the thing resolved. On the other hand, there's reason to think that Tuesday's elections, which went very strongly for the Democrats, has stiffened the spine of Democrats to say, well, maybe this is working in our favor. In fact, Trump in his analysis on Wednesday about the election said, I'm not on the ballot, that was the problem, and the other problem is the shutdown. So he thinks the shutdown has helped the Democrats. At least he did on Wednesday. Okay, now we're going to go to current and projected deficits overall. Congressional Budget Office. So this chart just shows what's been, the green line is what's annual expenditures as a share of GDP, and the red line is revenue. So we had just one brief period in the late 1990s where revenues actually exceeded expenditures, so we had a surplus, but by and large we've had deficits for a long time. And they're now running about 6% of GDP. The big surges you see were the 2008, but then only revenue dropped in the financial crisis, and then and spending went up, and then there's huge spending in response to the COVID crisis. Taking a longer term view, CBO projects that with no change in law, they're in a difficult spot. We have lots of laws that could change. Trying to project the future, they just assume, let's assume that there's no change in law. What happens to spending, what happens to revenues, what happens to the deficit? So they're expecting current deficit of about 6% to continue and rise to about 7% by 2055. So the next 30 years, no change in law, we're going to have sizable deficits. If we run deficits, we add to the debt. In analyzing the debt, economists put it in the context of the size of the economy, just as these measures are percentage of GDP. It's not just the deficit, it's how big is the, for businesses or households, you can take on more debt if your income goes up and your capacity to pay for it. So that's why economists look at deficits and debt in the context of what's happening to the size of the economy at the same time. So charts are percentages of GDP. And if the deficits add to debt at a slower rate than what the economy is growing, then it's less of a problem. But if they're adding, it's about 1 to 1. So we're basically adding about 6% to the debt every year. But the economy is growing only 4%. So that ratio is getting worse, and it's projected to continue worse with 6% GDP, 7% GDP deficits, and 4% nominal GDP growth. So this chart looks at what's happened to the debt since 1982. It's grown pretty steadily, again, except for that exception of the late 1990s when we had Clinton had raised taxes, the Republican Congress was restraining spending, and the economy was growing rapidly. We're growing real terms about 4%, nominal terms about 6%. So that was a period in the late 1990s when the debt to GDP fell. But other than that, it's basically been going up. Grew particularly fast in 2008 and 2020 when those crises happened. I showed those big deficits.
What's the latest?
What's that?
That's 2022.
Well, no, this goes to the second quarter of 2025. I didn't have enough room to put all the years in there, so it started in 82 and then it's every 5 years after that, but that's 2025 numbers. Again, you've been following the real financial minutia lately. There's been concerns about what's happening to the repo market for money markets. And the Fed's share of the debt. The Federal Reserve bought a lot of treasuries in the crises of 2008-9, and again in 2020. So the purple is the Fed's holdings of the debt. Those rose sharply, and then a couple of years ago they decided to stop to let the debt that they held to run off. They bought treasuries, some of which were expiring. As they matured, they let it run off, so their holdings fell. And some people think this contributed to issues in the repo market for money markets. So the Fed this past week announced that they're going to start increasing their holdings of treasury at the pace of the economy. So they don't want to raise their share, but they want to raise their quantity. Looking at this going forward, not surprisingly, with the numbers we've been talking about, 6% deficits and 4% nominal GDP growth, the debt to GDP keeps rising. Now let's just look quickly at another critical piece of the budget outlook, which is concerned those of us who expect to live past 2033, the Social Security and Medicare budget. So for many years, we have trust funds that people, payroll taxes, or Social Security taxes, and Medicare taxes pay into the trust fund, and then they fund what's most of Medicare and all of Social Security. And those funds were in deep trouble in the early 80s. Greenspan led a commission to change the taxes and the formulas so that we went back into surplus and were added for many years to the trust fund. But in the last several years, we've been depleting the trust fund. We've been paying more for both Medicare and Social Security than the payroll taxes that are going into those trust funds. And the expectation is that by 2033, that those trust funds will exhaust. If nothing is done, we get to 2033 and we no longer have trust funds, then the law says we pay out what the current revenues, payroll taxes can fund. Social Security taxes go down more than 20%, and Medicare payments go down substantially. As this chart indicates, Medicare's share of the economy has been rising much faster than Social Security. Both are driven by both have been increasing because of the aging of the baby boom, but the Medicare trust fund is also affected by the rising medical costs. And so combinations means that they're both spending up a lot and no longer keeping up with payroll revenue. And this, what we know is that the people don't like to see their benefits cut, and they don't like to pay for more taxes, and so we've got an immovable object, an irresistible force that nobody really wants to face right now, but it's gonna hit us in 2033 if we don't do something about it. Finally, let's talk about the tariffs. The Supreme Court heard, CBO was asked to look at what, if we just capped the tariffs that were in place this summer indefinitely, what would that do to revenue? They said it was going to raise about $3.3 trillion over the next 10 years. That additional revenue would mean we add to the debt, and therefore reduce our interest payments. So the combination would be $3.3 trillion more revenue, 0.7 trillion less interest payments, and so the deficit would be reduced by $4 trillion. Since then, tariffs have been changing. It will be no doubt be changing again. And then on Wednesday, the Supreme Court heard arguments on whether the president had legal authority to impose the tariffs he's done. I listened to those oral arguments, and I would say the odds are, the opinion markets say there's a 25% chance that they will support the president. 75% think the Supreme Court. They're basically three Democratic justices who are clearly against them. There are three very conservative justices who are clearly for them, and three are in the middle. But they were all asking very tough questions of the administration. And that's why most legal experts think that there are at least 5, maybe 6 votes against the legality of the president's actions. But if they rule against the president, as this came up in the oral argument, there are other authorities that the president have to raise tariffs that he could do if those were struck down. Those other authorities that he has to change tariffs are more limited in scope than what he's been doing in the last 9 months. Okay, that's what my presentation is. I hope I've left some time, 11:39, so I have plenty of time for questions, substantive or technical or whatever. Yes?
What do you think is going to happen with the Chinese deficit coming down since the tariffs are coming down from China, on China, and they've increased the buying of our farm goods.
You know,
Repeat the question.
no, okay. So the question is, what do I think is gonna happen with trade with China, with the tariffs coming down on China, and what was the other?
Chinese buying.
Chinese promising to buy more of our stuff.
Yeah, buying soybeans.
Yeah. So, what we know about the last 8 months about dealings with China is that it's up and down. We've threatened 150% or so tariffs on them, and they've done 150 against us. They have considerable leverage that the Trump people don't really want to acknowledge, that they supply critical earths that are essential to our technology and defense industries, and gallium, which is another, it's not a rare earth, but it's a similarly important element that is critical to high tech, and so they've threatened well, they have limited their exports and threatened to, in a meeting that Trump and Xi had in last couple of weeks, they agreed to back off for a year on Chinese restrictions, and they agreed to buy some more. You know, this president is a very transactional president and doesn't seem to be committed to what previous presidents have to our trade agreements. Or the most recent trade agreement that he renegotiated the trade agreement with, when he was, the first time he was the president, renegotiated he said it was a wonderful agreement that he made with Canada and Mexico on trade, and then he's ripped it up. So it's anybody's guess what happens. I think, I remember after talking to Jim about my first talk, he was saying that, you know, he thought that there would be wiser heads in the administration and they were moderating. Clearly, Treasury Secretary Bessent is concerned about how the tariffs, he had said back in December, before taking office, that Trump's tariffs would be used for negotiating. And that's clearly what they've been doing. I think we're going to see continuing negotiation. I think there's going to be, you know, just a year's postponement of, that means we're a year away from another confrontation. So I think that they would love to get NVIDIA's best chips. Their AI industry is hurting because they don't have NVIDIA's best chips. They would love to get those, but we're not giving it to them. So they're still anxious. But they promised to buy our soybeans, which helps the farmers here. They backed away about, they said they weren't going to buy our soybeans, which was a big distress to our, in their Midwestern states where soybeans are a big deal. I'm not sure I fully answered your question, but it's complicated and will continue to be. I think that those chips are a big bargaining issue for the Chinese, and they've got bargaining about buying our soybeans and selling us the critical elements. Joanne?
There seem to be some less than regulatory acknowledged major changes in tax law. And I have read that there are hundreds of billions of dollars in tax credits and lack of tax revenue that are being caused by interpretations by the IRS. Are those numbers included in the CBO's projection for future?
I doubt, so I don't, did everybody hear her question?
No.
Okay, so there have been stories that the IRS has been reinterpreting the way the tax law is being administered, that has caused reductions in revenue to the tune of hundreds of millions of dollars. And of those changes in the way the IRS is interpreting the law and the obligation to pay taxes, and those reflected in the CBO's projections, and I doubt it. I don't know for sure, but I doubt it. It's there, as I said at the beginning, or maybe I did, but it's in my text. There are many assumptions that CBO has to make. They do their best job of assuming them, but there are going to be errors and omissions and the estimates they make. And so I think it's very hard to predict those things. I mean, a Democrat could come in and put a new IRS commissioner in and they would tighten it up. It's not like that has happened too. What we do know, I mean, my personal experience, I was the staff director of the subcommittee of appropriations that financed the IRS. And the CBO's best estimate of funding of the IRS was that at the margin, an additional dollar spent to the IRS, and therefore more enforcement, raised $6 to $7. So it reduced the deficit. You spend more, but the deficit goes down because the revenue goes up more than the spending goes up. But when I was during the Republican era, they reduced funding for the IRS. So it didn't start with Trump. The Republicans have reduced enforcement and collection of revenue, and the Democrats increase enforcement and revenue. I also was the chief economist at the Commerce Department and overseeing the Bureau of Economic Analysis that does the GDP statistics, including the GDI statistics. And they have to estimate what profits are for unincorporated businesses. And the IRS did what was called by Republicans on the Hill the audits from hell 30 years ago. And what they found at the end of those was that the reported profits were half of what the actual profits are. So the BEA, I don't know what they still do, but when I was closely following, the BEA took reported profits and just doubled them for estimating corporate or business profits. Yes?
How much has the chip manufacturing in the United States increased since we stopped buying so many chips from China?
Well, we never bought that many chips from China. Most of our chips come from Taiwan, unless you call that China.
You're right.
But it takes a while so first Biden and now Trump are trying to encourage more production here, but it takes a while to build it. I don't know what the numbers are there. They're going up. There's a very substantial increase in chip manufacturing capacity. It's ongoing, but how much they've actually increased so far, I don't know.
We often hear that the appropriations process is fairly rigid. You kind of mentioned that in your talk. And yet we often also hear that the executive branch has found some money somewhere to apply for something that does not relate at all to why that money was ever appropriated. Recent example being Argentina. Is the process really that fluid?
Repeat the question.
So he was saying that there's issues about how rigid the appropriations bills are for what can be spending, how much flexibility that some administrations have used to spend money that wasn't directly applied there. And then he's asking about the recent funding for Argentina. That's a complicated question. So appropriators do care. They have earmarks, but they also have understandings that we'll give you more money if you do this, but it isn't in the law. So appropriators do care about being able to control spending and how it's spent. the executive branch doesn't like to be so restrained. And this, the understanding of Republican presidents as well as Democratic presidents in the past, that they pretty much had to follow what the appropriators said. And that's not been the case this year. And the court has been more lenient on what, so far, what the executive branch can do with the money it wants to spend. That's one of the issues in the impasse we now have, is that Democrats in the Senate also want some assurance that what they pass an appropriations bill actually gets spent, and the administration's not wanting to commit. And I can assure you that the Republican appropriators are sympathetic to the Democrats on this. Why are they on the Appropriations Committee if they pass a bill that's supposed to spend this kind of money and it doesn't get spent the way they want it to be spent? Argentina is a different issue. Back in the 30s, the Congress passed a law that allowed for intervention in the exchange rate stabilization fund. And that is what we used to bail out Mexico and the debt crisis in the early 80s. We've used it with Poland, and we've used it in ways that really weren't directly the dollar, but it's a slush fund that now, I think it's got like $40 million in it. And they committed up to $20 billion to support the Argentine currency. The president of Argentina has been a big fan of Trump and vice versa, and he lost, a month and a half ago, his party lost heavily in Buenos Aires elections, and they were up for big national elections, and there's a lot of people, and a lot of people were thinking that the Argentine currency is too high. Milei, the president of Argentina, wants their currency to be high because it keeps inflation lower. And there was pressure on the Argentine currency to go down, and that's when Bessent stepped in and said, we're going to back up the Argentine, supporting, but is using this trust fund for economic stabilization, exchange rate stabilization. Eli?
Let's assume you're a limited liability corporation. Should we copy Warren Buffett or Jimmy Buffett?
Can you repeat the question?
Yeah.
Well, the direct question is, would it be prudent to increase the amount of cash we're holding?
So the direct question was, would it be prudent to increase the amount of cash you hold? And I do not want to get into investment advice. I've laid out arguments. No, Truman said he doesn't. He just send me a one-armed economist. I'm tired of hearing on the one hand and on the other hand. I'm a two-armed economist. I laid out reason to think that maybe there's things are different this time, and reason to think that maybe they aren't. I don't know about Jimmy Buffett, but it's certainly where Warren Buffett is.
So, if the Supreme Court rules against the administration, what is the expectation that the administration would even do, would just keep plowing forward? I mean, they have been doing whatever they want to do, regardless of what the Constitution says. So what do you think might happen? That would be a real crisis.
So the Solicitor General, who argued the case before the Supreme Court, made a statement 4 or 5 months ago that said we will usually follow what the court said.
Usually.
No, he made there's no ambiguity that they were not this Justice Department is not committed to always doing what the court said. On the other hand, they've strongly suggested that when it's the Supreme Court that says it, that they will follow. That the lower courts, different matter, but the Supreme Court, that they've strongly implied that they will obey the Supreme Court. I think they know that it would be a huge crisis if they just openly disobeyed what the Supreme Court said. Now, it's not clear what the Supreme Court's going to say, but the clear implication of the oral arguments is that they will say that these particular tariffs with this particular, so Chief Justice Roberts was saying, you're saying you can do for any reason, to any country, for any amount of time, is pretty wide open. And Gorsuch was making, I thought, a very compelling argument that we need to be, there's a doctrine in law that when Congress gives authority to the president that's very vast, that it needs to be very explicit about it. And not just sort of regulate imports, allowing you to have 150% tariffs against China. So there's an implication. So Gorsuch says, well, if they're giving this authority, who thinks that any future president would allow it to be taken back? Because the Solicitor General had argued in briefs that, well, Congress can always take it back. And he says, well, the only way they can take it back is with a 2/3 majority in both houses. And that's just not realistic. So what you're saying is a one-way ratchet to executive power that, so I think he is clearly against it. So that's 4 votes. And I'd say Barrett and Roberts asked tougher questions of the government than they asked of the appellants or the opponents to the case. But can't guarantee that they're going to do it.
Well, and you've got a president who admitted or said he could kill somebody on Fifth Avenue and get away with it. So that's my concern.
Well, and you've got a Supreme Court that said he could do that and get away with it as long as it was part of his official.
Yes, I understand.
I'm not predicting. Yes.
Part of the whole question is stability of government, which is just going out the window with Trump. He does this, he does that, nobody knows what he's going to do, nobody knows what he's going to vote with, who's going to vote against it. And here's the Supreme Court granting these temporary approvals, but they're not final for things that he's doing. And now you have Ketanji Brown Jackson not letting the SNAP funds be released, and I'm wondering what's happening.
I think the questions are over.
That's a good, I'm not going to try to answer that.
Just one thing, our next